Reaction to comments from central bankers at the recent Fed Jackson Hole conference, plus a huge week for data in the U.S. and Japan, could cause a significant week for trading in both the US dollar and the Japanese yen. For purposes of this, we're going to look at the dollar-yen pair, which has the potential to be really active this week because it's starting to look as though the Fed and the Bank of Japan may be starting to head in different directions on monetary policy as we move into September. Comments out of the Fed at the Jackson Hole meeting from Fed Chair Yellen was fairly neutral and balanced, but at the same time still leaning towards a rate hike this year. She's indicated that U.S. employment and U.S. inflation were starting to near the Fed's long-term targets, so the Fed's starting to think about moving again. She kind of left the door open as to whether it could be in September or December, but kind of leaning towards a rate hike this year. Fed Vice Chair Stanley Fitcher came along afterwards and said that her comments are actually were indicative to him of a openness to moving in September. Cleveland Fed President Messer also suggested she's ready to move on rates sooner than later if the data holds up. So we do have a more hawkish faction coming through at the Fed. At the same time, at the Bank of Japan, they are still leaning dovishly. Governor Kuroda suggesting that he still has room for more stimulus. The Fed meets on September the 15th. Around there, the Bank of Japan is a week later, and we could see this month where the Fed goes hawkish and the Bank of Japan potentially goes more dovish. Where are we seeing this showing up? We're seeing this in dollar-yen. And look at this. We had the pair dollar-yen has been in a downtrend, or yen outperforming, through pretty much this entire year. But look at this. We've got a real floor coming in here at the 100 round number. We're starting to see here RSI showing momentum turning up. And look at this. It's back above 50. What does that tell us? Momentum's turning up. Look at this big green candle here. Big blast off from 100, trading up near 102. We're still within this long-term falling channel, but it looks like we could have a rally within it. First potential resistance for dollar-yen in and around 102.80. Second, up here around 104.50, and then there's the 105, and this 23% retracement here is about 105.15. So we could see some significant swings in either direction or both in dollar-yen. Now this week in particular, we could see things quite active because we got a lot of data coming out that might give a better direction on what kind of pressures are on the central bankers to do something. In the case of Japan, Monday night and Tuesday night, we get their monthly basket of data. The first round is things like retail sales and employment, and then the second round is construction and housing. So we kick off at the beginning of the week, heavy focus on Japanese data, and then that'll tell us how poorly is their economy doing, how much pressure is Governor Kuroda under to do something. Later in the week, focus shifts to the United States. Is what's happening there? Is the Fed actually approaching its targets in terms of employment? Is that still happening? And how much pressure is the Fed under to make a move in September? You wouldn't normally expect them to do so because of the election, but because they put off raising rates in June due to the Brexit vote, they may feel the need to go now. So we've got some key things. We've got manufacturing PMI on Thursday, but the big ones, Wednesday, ADP payrolls, Friday, non-farm payrolls. If U.S. jobs hold up and continue to grow, there'll be even more pressure bearing down on the Fed to raise rates even before the election. And with inflation, we're already seeing that today. On Monday, one of the Fed's favorite inflation measures is called core PCE inflation. People had been expecting it to go down. It stayed level at 1.6%. That's within striking distance of the Fed's 2.0% target. So focus on inflation, focus on employment could lead to, and focus on data and monetary policy could drive significant interest in trading in the dollar-yen this week.